The market doesn't care about your dreams. It doesn't know you stayed up until 3 a.m. studying charts, or that you've been paper trading for months, building confidence one green candle at a time. It simply opens each morning, indifferent to your hopes, your fears, your carefully crafted plans. And in that indifference lies both terror and opportunity. Make sure to like the video and subscribe to the channel. Your support is important for our growth. Most traders enter this arena believing they're fighting price action, wrestling with support and resistance, battling volatility itself. But the real war happens in the space between your ears, where logic meets emotion, where discipline faces temptation, where every decision reveals who you really are when money is on the line. Today, we're diving deep into the psychological battlefield that determines whether you'll join the 90% who fail or discover what it truly takes to survive and thrive in the markets. Let go of the myth, abandon the search, and discard the fantasy that a single system will rescue you from pain, because the truth holds far more power. A system doesn't transform you into a wizard. Instead, a wizard makes the system work. Consider Paul Tudor Jones, a man whose name resonates through Wall Street, who has generated millions and survived market crashes. Yet with each trade he places, he whispers 4 humble words. I could be wrong. In that single sentence, he articulates what most traders desperately avoid acknowledging. Here lies the profound paradox. The more skilled you become, the more dangerous your certainty grows. Most traders mistakenly conflate confidence with conviction, but these are fundamentally different concepts. Conviction is quiet and humble, preparing for both success and potential failure. Confidence declares, I've done my work. If this setup fails, I'll still be okay. In contrast, recklessness proclaims, this can't possibly fail. The moment you believe you cannot be wrong, you already are. The market remains indifferent. It doesn't care about your reputation, your previous winning streaks, or your last 5 perfect trades. The instant your ego expands beyond your process, the market will swiftly and painfully bring you back to reality. Every great trader Jack Schwager interviewed experienced a transformative moment, a loss that shattered their psychological identity. They weren't defeated by poor trading setups, but by overwhelming overconfidence. Success made them reckless, and recklessness made them fragile. The lesson they learned through profound struggle was simple yet profound. True confidence isn't about eliminating fear, but about maintaining discipline despite it. Wizards don't trade because they're certain. They trade because they're prepared. They trust their edge, not the guaranteed outcome. They measure risk, not inflate their ego. They never declare, this must work, but instead think, if it doesn't work, I know exactly what my next move will be. This is genuine confidence, not loud or brash, but calm. It's a stillness beneath the surface, a readiness to adapt, reverse, cut, or flip without experiencing shame. Wizards don't marry their predictions, they marry their process. They refuse to tie their identity to a win or spiral into despair after a loss. They observe, adjust, and detach. And above all, they review, meticulously examining not just their losses, but their wins as well. A winning trade made through poor decisions isn't truly a success. It's a hidden failure, lurking and ready to detonate later. This is why the most skilled traders maintain a journal, not to inflate their ego, but to maintain brutal honesty. They constantly interrogate themselves. Was this genuine skill or mere luck? Did I adhere to my strategy or manipulate the outcome? Would I replicate this trade even if it had resulted in a loss? When your confidence stems from truth rather than just outcomes, you become immune to the seductive power of winning streaks. You stop increasing position sizes out of pride. You eliminate those catastrophic mistakes that stem from an inflated sense of invincibility. And here's the profound insight: the deeper your humility, the more robust your confidence becomes. Not because you never falter, but because you understand how to recover. Cleanly, clearly, without needing to prove anything. You're no longer chasing the adrenaline rush. Instead, you're preserving your trading rhythm. True masters don't roar after victories. They breathe, they pause, they plan the next setup with the same disciplined approach they maintained during their worst drawdowns. This is genuine confidence, the quiet inner voice that declares, I am not defined by this trade or its result. I am the executor of a process I fundamentally trust. The real test becomes, can you walk away after 5 consecutive losses without losing your core self? Can you remain grounded during periods of success? Can you honor your process when your ego desperately wants you to gamble? If you can answer yes, you're cultivating a confidence that transcends monetary value, a confidence no loss can truly erode. When that transformative moment arrives, you'll face the market chart not with arrogance, but with alert, calm stillness. You'll realize true confidence isn't about predicting market movements. It's about knowing precisely how you'll respond, regardless of what the market does. This is the moment you transition from being a mere trader to becoming a true trading wizard. Every trader remembers their first profound loss, not the minor red day or the sensible stop loss. This is the loss that leaves your hands trembling, the one that whispers devastating doubts about your capabilities. It's the moment when illusions shatter, when the boundary between the trading screen and your inner landscape blurs completely. You're not just losing money, you're confronting the potential disintegration of your identity. Staring at the chart, you're no longer seeing price. You're witnessing a landscape of doubt, fear, guilt, and profound shame. And in that moment, you're consumed by a single haunting question. How did this happen? You followed the rules. You broke them. You thought you could handle the risk. You were sure the setup would work. You told yourself it was just a pullback. You averaged in. You froze. And now you're here. Smaller than the number on your balance, sinking inside a silence no strategy ever warned you about. But here's the truth that most will never tell you. Losing isn't the opposite of winning. It's the tuition you paid to learn how to win. It's not failure. It's feedback, but only if you're willing to listen. Marty Schwartz knew this firsthand. A former Marine turned market trader, he experienced countless defeats in his early career. He blew up trading accounts and walked away, convinced the markets weren't meant for him, yet something kept drawing him back. This time he approached losing differently. He stopped taking losses personally and started fighting less. Instead, he began asking a crucial question. What is this loss trying to teach me? Every loss is a mirror. It reveals not just what went wrong, but who you were in that moment. It exposes hidden hesitations, rationalized greed, emotional blind spots you've refused to acknowledge. These losses aren't mere market events. They're psychological audits. The longer you ignore their message, the more expensive the lesson becomes. Traders who achieved greatness weren't spared from loss. They were transformed by it. Jack Schwager documented this repeatedly. Bruce Kovner risked everything on a single trade. Michael Marcus watched his account swing from 30K to 80K, then lose half. Twice. Tom Baldwin took such a devastating hit that he had to go outside and scream, but none of them quit. Pain wasn't their endpoint, it was their beginning. When studied, pain becomes pattern recognition. Pattern recognition evolves into instinct, and instinct becomes your edge. The real challenge isn't avoiding pain, it's surviving it without losing yourself. The question shifts from how can I avoid losing to how can I endure it, study it, and rise stronger. The moment you stop fearing red, the moment you stop taking losses personally, you start trading like a professional. Amateurs chase perfect entries. Wizards build emotional armor. The goal isn't to never lose. It's to learn from every loss. Losing isn't about destruction, but learning. The key is cutting losses quickly, reviewing them ruthlessly, and respecting your risk parameters even when every emotional impulse screams to recover. Losses truly test not your trading strategy, but your fundamental belief in yourself. When that gut-wrenching drawdown hits, when shame spirals and unintended trades consume you, resist the urge to numb or deny the experience. Instead, lean into the discomfort. Ask yourself critical questions. What rule did I violate? Which emotion hijacked my decision-making? What internal belief convinced me I absolutely had to win this trade? What hidden part of me is still trading from a place of fear rather than calm flow? Within these uncomfortable answers lies a blueprint for personal evolution. Every loss carries a message, and every trader faces a choice. Ignore it and repeat the same mistakes, or study it and transcend them. The difference between traders who endure and those who burn out isn't raw talent. It's their willingness to examine and learn from failure. Jack Schwager observed something profound during his interviews with traders. Many could pinpoint the exact moment their trading transformed, and surprisingly, it wasn't after a massive win. Instead, it emerged from a devastating loss. Pain has a way of humbling the ego, and in that humility, a new kind of wisdom takes root. If you're bleeding financially and emotionally, questioning everything, feeling tempted to walk away, take one more breath, not to force a comeback, but to listen to the lesson beneath the loss, the pattern beneath the pain to the emerging version of yourself waiting to be born through this failure. Perhaps this loss isn't an ending, but an initiation. Consider two traders with identical strategies, risk parameters, and entry signals. One ends the month profitable, the other hemorrhaging money. The difference isn't the system, the market, or luck. What changed was their internal state. Every trade transcends mere technical setup. It's a psychological event, a spark igniting something deeper. You can back test extensively, optimize entries, calibrate stop losses, and fine-tune every condition. But the moment you go live, something shifts. Your hands sweat, your heart races. The trading screen becomes a battlefield where the real enemy isn't price, it's panic, the whispered fear. Don't lose this one. Double down and you'll be right. You can't endure another red day. Suddenly your system vanishes. All that remains is pure reaction, because that's the truth nobody wants to acknowledge. The real advantage isn't your strategy, it's your capacity to stay aligned when emotions threaten to pull you off course. You don't lose trades because your system is broken. You lose them because in the intense moment, you couldn't remain present. And it's not entirely your fault. Initially, you weren't prepared for this. No one taught you how to breathe through a 5-figure drawdown. No school explained how hope hijacks rational thinking. No course equipped you for the gradual erosion of confidence that begins the moment a candle moves against you. But the market wizards, they learned. They adapted. They didn't suppress emotion. They studied it. Because unacknowledged emotion becomes sabotage. But a recognized emotion becomes an edge. Ed Seykota once said, the elements of good trading are 1. Cutting losses, 2. Cutting losses, and 3. Cutting losses. If you can do that, you might have a chance. Simple words. Yet try following them when fear has seized control of your nervous system. When the screen turns red and your mind starts spiraling, that's the real challenge. And that's where genuine traders are forged. Those who endure don't numb their emotions. They create space between feeling and action. They journal before the trade. They identify what's present: anxiety, greed, pressure to perform. By naming it, they reclaim power. Because the moment you name an emotion, you're no longer controlled by it. You're observing. And in trading, awareness becomes a weapon. Market wizards train themselves like monks. Calm, clear, detached from outcomes, not indifferent, but intentional. They don't need every trade to win. They need to follow their process. They understand that a winning trade taken in fear is still a loss. A losing trade executed with discipline represents a form of mastery. So how do you develop this inner edge? It begins with a simple loop. Pause, label, breathe, act. You feel the emotion rising. You don't react. You pause. You name it. You breathe through it. Then you return to the plan. It might seem insignificant, but it transforms everything. Because gradually you start to trust yourself. Trading transcends mere technical execution. It's about your inner state and emotional resilience. You become less reactive, maintaining composure when circumstances turn unfavorable. You resist impulsive chasing during favorable moments. True trading mastery isn't about domination, but presence. It's not about eliminating emotions, but developing a nuanced relationship with them. Elite traders aren't emotionless automatons. They're emotionally sophisticated, understanding the subtle distinctions between protective fear and destructive panic. They recognize when an urge to overtrade emerges and consciously choose restraint. They can sense rising euphoria and deliberately scale back instead of escalating positions. This emotional intelligence represents a genuine competitive advantage, something no online tutorial can teach. Such mastery emerges through persistent practice, deep self-reflection, and willingly experiencing discomfort without escape. The more you can experience emotions without flinching, the more clearly you can act. Your trading system doesn't fundamentally change. You transform. When emotional intensity surges, the approach isn't suppression or drowning, but mindful acknowledgement. You recognize fear, ego, and greed without surrendering control. I see you. You're present, but not in charge. Then you return to stillness, to process, to breath. In these moments, you're not just executing a trade. You're cultivating inner discipline. You're building muscle memory for calm. Gradually, calm evolves into confidence. Confidence becomes trust, and trust develops into instinctive understanding. Nature doesn't favor the strongest, but the most adaptable. Trading mirrors this principle. The market won't accommodate your expectations. It doesn't pause for your convenience or respect the time you've invested in developing strategies. The instant you declare absolute certainty, the market will swiftly demonstrate otherwise. The fundamental truth is straightforward yet challenging. Rigidity invites destruction. Novice traders desperately cling to methods that worked occasionally, attempting to force the market into their predetermined framework. But markets are fluid. Like water, they flow, swirl, evaporate, and flood. Successful trading requires continuous adaptation, not rigid adherence. If your mind becomes rigid like stone, you'll sink beneath the waves. This fundamental difference distinguishes survivors from those who struggle. True mastery lies in range. Wizards of trading adapt, not from indecision, but through keen observation. They constantly ask, what defines today's market environment? Is this a trending day or a choppy landscape? Should I increase my position or completely step back? These skilled traders refuse to force trades into rigid scientific models. They don't chase phantom signals or imaginary patterns. Sometimes their most powerful action is complete inaction, and paradoxically, this nothingness becomes their most profitable strategy. Yet ego constantly undermines this approach. Humans crave action. We want to click, to trade, because movement feels productive. It creates an illusion of control, but genuine control often manifests as restraint. Adaptability isn't chaotic. It's a carefully calibrated flexibility. It's understanding precisely when to shift gears and when to stop entirely. Consider Richard Dennis, the legendary trend follower who built massive fortunes by capturing long-term market movements. When market dynamics shifted, volatility compressed, time frames shortened, he was forced to evolve. Those who remained unchanged simply disappeared. What worked last year or even last month could betray you tomorrow. Attaching your identity to a single trading style becomes dangerous. You'll misinterpret necessary changes as personal failures. Continuously hammering the same setup while markets transform becomes a path to destruction. You aren't just a breakout trader or a mean reversion scalper. You're a fluid student of market flow. Your fundamental role isn't prediction, but response. You don't impose your will, you read the market's pulse. And when that pulse changes, you change with it. This adaptability transcends technical skills. It's deeply psychological. It means allowing yourself to walk away when nothing aligns. It means reducing exposure when volatility spikes beyond your nervous system's capacity. It means confidently stating, I don't know, not from weakness, but from profound respect for market complexity. True market wizards don't marry their methods. They date them, ready to end relationships when strategies turn toxic. They meticulously track market conditions, maintaining multiple playbooks, trend, range, high volatility, low volatility, and even no trade scenarios. They adjust risk not through hope, but through genuine readiness. The ultimate goal isn't constant winning, but consistent alignment, and alignment becomes impossible when beliefs remain frozen and inflexible. Are you truly trading the market as it is, or the one you imagine in your mind? Are you adapting to the current reality or stubbornly clinging to old beliefs? Are you responding to the present moment or mindlessly repeating past patterns? When a trading setup stops working, it's not a betrayal, it's valuable feedback. And when your system breaks down, it's not a failure but a signal to listen more carefully. True trading masters embrace this constant evolution. Mastery isn't about repetition, it's about continuous renewal. So when you catch yourself saying, but this always worked, pause and take a breath. Ask yourself, is this belief still serving me, or am I just protecting my wounded pride? Pride is rigid and inflexible, while humility is fluid and adaptable, and trading rewards those who can flow with changing conditions. Here's the fundamental truth that every great trader understands. Success isn't about being the smartest person in the room. It's about adapting faster than the market can punish you. The most successful traders are those willing to let go of what used to work in order to embrace what is happening right now. This willingness to adapt is what keeps them in the game. The market doesn't require perfection or supernatural prediction skills. It simply demands that you remain alive and responsive. Be like water, flexible enough to bend without breaking. If you can stay adaptable, you keep your possibilities open. Consider the brilliant trader with a photographic memory and an Ivy League background. He could memorize entire balance sheets and spot market inefficiencies in seconds. By all accounts, he was a genius. Yet he couldn't follow a simple stop loss, and that's why he lost everything. The market doesn't reward intelligence. It rewards disciplined obedience to a plan, to a process, to rules you never break, especially when emotions are screaming at you to do otherwise. Genius can be seductive, giving you false confidence that you can outsmart randomness or predict the unpredictable with pure mental prowess. But trading isn't an IQ test. It's a test of self-control. The market asks one relentless question: can you follow your rules when your emotions are raging? Most traders cannot. They follow the plan until it becomes uncomfortable, until the price moves against them, until the trade doesn't feel right. Then ego or fear takes control, and they abandon their carefully crafted strategy. Discipline fades silently, almost imperceptibly. A rule bends slightly, a stop shifts incrementally, a position expands subtly. In an instant, a meticulously constructed system collapses through a momentary impulse. This is how accounts vanish. Not through strategic weaknesses, but through fleeting discipline failures that reverberate for weeks. Wizards don't need to be the room's intellectual giants. They simply must be consistently precise. Tom Baldwin wasn't a mathematical genius, but he possessed extraordinary self-awareness. He understood exactly when to scale positions and when to retreat. His rules were sacred, followed even when every instinct screamed to abandon them. In the early stages, he candidly labeled himself a champion loser. The transformation occurred through one pivotal decision. Never again would he disregard a stop loss. This wasn't about technical refinements or magical indicators. It was pure discipline. That singular shift changed everything. Discipline transcends mere rules. It's a complex negotiation with the self-destructive part of your psyche. It's the internal dialogue during low moments. It's constructing protective systems against your own worst impulses. Unglamorous and unexciting, discipline quietly compounds. Trade by trade, moment by moment, consistently choosing process over panic. The fundamental truth is that discipline is mundane, but boredom births mastery. Most traders chase stimulation, craving the adrenaline, the pursuit's excitement, the dramatic comeback. Wizards, however, deliberately engineer boredom into their brilliance. Their setups are predictably replicable, decisions predetermined, checklists treated as sacred texts. They don't ask, do I feel like exiting? They ask, what does the system dictate? This isn't laziness, it's liberation. Trusting your rules means liberating yourself from emotional volatility. Paradoxically, this detachment becomes your greatest strength. Building such discipline requires intentional monotony. Automate decisions, implement rigorous checklists, establish risk parameters before trading, not after suffering losses. Reward flawless execution, regardless of outcome. Approach breakdowns with analytical curiosity rather than shame. Investigate. Which emotion hijacked my judgment? Here's the rewritten fragment. I needed to understand my disconnection. Where did I lose sight of the original strategy? The core truth emerged. Trading isn't a solitary journey. You create accountability through transparency. Documenting your process becomes crucial, whether through public or private journaling, recording your thoughts, or establishing constraints that shield you from impulsive decisions. Left unchecked, the human mind gravitates toward momentary relief rather than fundamental truth. True discipline means choosing authenticity even when comfort beckons louder. It's about clicking exit when your ego demands you hold on. It's remaining neutral when revenge trading tempts you. It's pausing when the urge to chase overwhelms your entire being. This is where genuine excellence emerges, not through intellectual prowess or complex analysis, but through repeated moments of emotional courage. Let others pursue signals and showcase their brilliance. Let them attempt to outsmart randomness. Your focus is discipline, because while genius might win isolated battles, discipline conquers the entire war. From our market entry, we're bombarded with a singular message. Conquer your emotions. Fear and greed are portrayed as enemies to be vanquished. Master them, or be destroyed. But what if this perspective is fundamentally wrong? What if fear and greed aren't adversaries to eliminate, but instruments to be carefully calibrated? What if the real problem isn't experiencing emotions, but never learning how to truly hear them? These feelings aren't design flaws. They're messengers, signals, ancient warning systems designed for survival. When ignored, they scream. When denied, they sabotage. When misunderstood, they dictate trading decisions. Consider fear. It whispers when your position becomes too large. It constricts your chest when risks exceed your capacity. It floods your system when method and trust disconnect. It paralyzes you before entry and sometimes right before breakthrough. Fear doesn't always signal danger. Sometimes it marks the threshold of potential growth. The wise trader learns to discern. Is this fear a signal to pause or an invitation to evolve? They don't resist the feeling or chase it away. Instead, they become still. They breathe. They investigate. The emotion itself isn't the threat. Your unconscious reaction is. And then there's greed. Greed creeps in silently, more subtle than aggression. It disguises itself as confidence, whispering persuasive promises. It convinces you this trade will continue indefinitely. It tempts you to increase your position size. It makes you murmur, just one more, under your breath. But greed isn't truly about ambition or growth. It's rooted in fear, the fear of missing out, the terror of not having enough, the desperate belief that this single trade will solve everything and make you whole. This is where greed becomes truly dangerous. When you start believing the next win will repair all your problems, you attach your entire identity to the trade's outcome. You stop analyzing the chart objectively and start trading your self-worth. At this point, losses aren't merely financial setbacks. They become personal devastations that shatter your entire sense of self. Experienced traders, the wizards, approach this differently. They don't attempt to eliminate greed or fear. Instead, they learn to understand and decode these emotions. They treat fear like a reflective surface, using it as a signal to check their position sizing. It becomes a warning to slow down, reset, and review their approach. They constantly ask themselves, am I acting from a structured process or pure panic? Similarly, they view greed as a navigational tool, a compass indicating rising emotional intensity. It prompts them to zoom out, to remember that this trade is just one moment in a long trading journey. It's not salvation or redemption, just a single move in a complex strategy. When emotions surge, they meticulously document every detail, every surge, every subtle reaction, every thought that pulls them away from present moment awareness. Over time, patterns emerge. They recognize their triggers, getting greedy after 3 consecutive wins, feeling scared when entering a trade late, increasing position sizes when they feel behind. In recognizing these patterns, they discover true power. They don't judge these feelings, they map them. They train with emotional fluctuations like athletes studying physical fatigue or monks observing passing thoughts. This is emotional mastery, not suppression or denial, but observation, naming, noticing, and skillful redirection. The fundamental truth is that emotions cannot be eliminated, but you can choose your response to them. You can feel a surge of excitement and still follow your established rules. You can experience a rush of adrenaline and remain balanced. You can sense panic and still exit a trade with composure and grace. This isn't weakness, it's presence. And presence is extraordinarily rare. Most traders trade to experience something: excitement, validation, power, control, or redemption. But true wizards trade to cultivate awareness. They don't chase emotions, they track them. They don't react impulsively, they respond deliberately. They don't fight themselves, they understand themselves. Because fear and greed aren't obstacles to overcome. They're integral parts of the trading process. When emotions become tools, they transform. Fear, when harnessed, becomes a protective signal. Greed, when understood, turns into an ally. Instead of pushing these feelings away, lean into them. When fear arrives, don't run. Ask what it's trying to shield you from. Explore the underlying warning. When greed surfaces, resist self-judgment. Investigate your true hunger. Examine whether the current pursuit has deviated from its original purpose. The goal isn't to conquer these emotions, but to meet them without flinching. Don't fight fear or kill greed. Simply notice them before they speak on your behalf. In this moment of awareness, something remarkable happens. You stop battling yourself and start trading in harmony with your inner landscape. Alignment brings clarity, and clarity awakens your trading edge. You've done the groundwork, studied charts, read countless books, taken courses, memorized setups, and spent months back testing. You know the strategy inside out, yet something still holds you back. Why do you hesitate at the crucial moment? Why enter trades too early or too late? Why adjust stop losses and watch trades collapse? After significant losses, why do you increase position sizes as if revenge could restore your dignity? Why do you consistently break your own rules despite knowing better? The answer is brutally simple and universally avoided. The problem isn't the system, it's you. This truth is both devastating and liberating. Until you acknowledge this, you'll continue blaming external factors: market volatility, spreads, timing, setups. You'll cycle through systems, timeframes, and instruments, anything to avoid confronting the real issue. The real challenge isn't your intelligence or work ethic. It's your self-awareness, emotional discipline, and comfort comfort with discomfort. Most traders perceive trading as an external game of charts and price action, but the market is a mirror, reflecting your inner landscape with unflinching precision. It exposes your need to be right, your fear of loss, your desire for control, your unresolved beliefs about money, worth, chaos, and failure. The market doesn't just reflect these emotions, it amplifies them through leverage. Every unexamined emotion distorts a trade. Every unresolved fear breaks a carefully constructed rule. The market doesn't just show you who you are, it demands that you confront yourself with radical honesty. Every surge of ego inevitably leads to a blown trading account. Traders mistakenly believe they're trading price, but in reality, they're trading their own psychology with risk intrinsically tied to their emotional state. Jack Schwager, after extensive interviews with the most successful traders, uncovered a profound pattern. These traders all harbored inner demons, but what distinguished them was their approach. They identified, confronted, and deeply examined these psychological barriers. One trader candidly revealed a self-destructive tendency to sabotage his most promising trade setups, rooted in a deep-seated belief of personal unworthiness. Another discovered he would recklessly increase position sizes after experiencing a loss, not driven by profit potential, but by an intense desire for redemption. Yet another recognized his compulsive overtrading as a mechanism to avoid the uncomfortable silence that reminded him of unresolved past failures. Gradually, through painful self-reflection, they arrived at a transformative insight. Trading isn't about market mechanics, but about the version of oneself that appears at the trading screen each day. And that version is rarely rational. It's emotional, reactive, triggered, perpetually attempting to heal old psychological wounds through financial victories. The true trading masters differentiate themselves by radical self-honesty. They cease making excuses and blaming external circumstances. Instead, they acknowledge, I am the variable in this equation, and that's empowering because I can be transformed. Their approach involves meticulous journaling, not for tracking performance, but for recognizing psychological patterns. They document their emotional state before each trade, methodically tracking what triggers rule violations and excavating not technical insights, but psychological roots. Over time, profound clarity emerges. They begin recognizing nuanced behavioral patterns, freezing after significant wins, chasing losses compulsively, losing focus when fatigued, breaking established rules when feeling professionally or personally inadequate. These realizations constitute their true competitive advantage, not a market strategy, but a deeply personal form of self-understanding. By healing their internal landscape, they paradoxically improve their trading performance. The setups work more effectively not because they've changed externally, but because the trader has stopped unconsciously interfering with their own potential. These trading wizards also implement rigorous personal boundaries. They don't merely suggest restraint, they create concrete, non-negotiable structures. Instead of vaguely hoping to limit trading, they establish precise daily trade limits. Rather than passively considering walking away after consecutive losses, they mandate immediate disengagement. They construct psychological scaffolding designed to hold them steady when emotional impulses threaten to derail their strategy. They understand that discipline isn't about harsh control, but compassionate self-preservation with clear boundaries. When inevitable mistakes occur, they respond not with shame or self-flagellation, but with genuine curiosity. They transform each misstep into a learning opportunity, maintaining an investigative, non-judgmental approach to their own psychological landscape. Traders don't label themselves as failures. Instead, they approach their experiences with curiosity, asking, what just happened to me? Most critically, they practice self-forgiveness, understanding that shame creates blindness, while compassion enables learning. Schwager repeatedly observed this phenomenon. The most successful traders possessed an almost therapeutic level of self-awareness. They didn't hide from their behavioral patterns or pretend to be emotionless machines. They confronted themselves with honesty, gentleness, and consistency. Through this approach, they stopped waging internal wars against themselves. If trading feels like self-sabotage, if you repeatedly make the same mistakes, if you understand what needs to be done but can't execute, stop searching for the next trading strategy. Instead, examine the version of yourself that emerges during critical moments. This is the real work, not discovering a new chart setup, but developing a new relationship with the person controlling the mouse. The most encouraging aspect is that if you are the problem, you are also the solution. By mastering yourself, the market transforms from chaos into a mirror. The more clearly you perceive its reflections, the more power you reclaim. Perfection isn't the goal, presence is. Being present enough to interrupt self-sabotage, to observe rather than react, to evolve with each trade. This is how you transition from being your own worst enemy to becoming your greatest asset. Something fascinating occurs when trading with small positions. The stakes feel low, the risk minimal, the financial outcome barely noticeable, yet the lessons are profound. When money doesn't dominate the narrative, truth becomes audible. The market grows quiet, as does your mind. Chaos softens, pressure dissipates, and awareness emerges. You begin to see beyond the chart, witnessing your habits, impulses, and underlying beliefs all exposed when the trading size is small enough to allow genuine honesty. Most traders resist this approach. They're eager to increase position sizes quickly, wanting to make their efforts feel significant. They think, what's the point of a $12 win? This won't transform my life. Financially, they're correct, but psychologically, such experiences might reshape their entire future. Because early on, making money isn't the primary objective. Trading is about building identity. It's about developing execution skills without the burden of ego. The moment you prematurely assess your potential, you shift focus away from learning. Suddenly, it becomes about proving yourself, needing this trade to validate your identity as a trader. This energy distorts everything. You exit too early, hesitate, break rules. Not because your trading system is flawed, but because your nervous system is overwhelmed. True trading masters understand this. They don't just analyze price, they study psychological pressure. When pressure becomes intense, they reduce trade size. Not as punishment, but as a strategic wisdom. Clarity emerges where fear dissipates, and fear thrives in oversized positions. You cannot think clearly when your entire account is at risk. You cannot refine your instincts when adrenaline is driving your decisions. Trading with small positions opens a different realm of experience. You begin noticing subtle behavioral patterns, how your breathing changes during entries, when your eyes dart to profit and loss instead of the trade setup, what thoughts emerge when a trade turns slightly negative, the precise moment your intuition whispers insights that you choose to ignore. These observations are invaluable. They form the foundation of true mastery, invisible at large scales, but vibrantly clear in smaller trades. Small trade sizes provide space to explore, test, fail without shame, and succeed without ego. They allow you to remain in the trade long enough to gather feedback, not just from market movements, but from your internal responses. This feedback becomes the pathway to emotional intelligence. You start recognizing personal patterns, rushing entries after losing streaks, becoming overconfident after 2 successful trades, losing focus when increasing position size, trusting your system more when you're calm. Suddenly, you're not just trading, you're evolving. Most traders forget this crucial aspect. Each small trade serves as a mirror. If you're courageous enough to look deeply, you'll perceive what needs growth. Trade small intentionally, not from fear, but from a desire to build something more profound than mere profit. You're cultivating discipline, clarity, presence, and patience, the invisible qualities that ultimately support visible results. When the moment arrives to increase trade size, you'll do so with complete alignment. Your motivation won't be impressing others, but a genuine readiness where your trading system, psychological state, and inner spirit are fully prepared. True trading wizards don't fear small trades. They embrace them as transformative opportunities. They respect the process. They return to their core principles when chaos erupts. They reset through simplicity. Paul Tudor Jones emphasized not focusing on earning money, but protecting existing resources. Yet we can delve deeper. Don't chase profits. Instead, cultivate the character capable of managing wealth without losing inner balance. Small trades construct that character. They strip away distractions. They establish rhythm. They refine decision-making. When $20 feels as significant as $2,000, you're practicing precision. You're training yourself to execute identically, regardless of stakes. That's genuine power. That's authentic presence. This is why trading small becomes the pathway to learning big. When ego demands expansion, pause. Take a breath. Interrogate your true motivation. Do you genuinely want to trade effectively? Or merely feel momentarily important? Are you attempting to heal internal wounds through this trade, or committed to following the established process? Releasing attachment to specific outcomes creates space for authentic growth. Within that space, your competitive advantage emerges, not through position size, but through profound self-understanding. Begin modestly, maintain mental sharpness, accumulate fundamental truths. Eventually, your modest trades will reverberate into substantial achievements, not because they generated wealth, but because they prepared you internally. You followed every rule meticulously, you waited patiently, you documented each trading setup, you rigorously backtested for months, you sized positions carefully, you executed everything perfectly, and still, you lost. The trade moved against you, your hypothesis failed. You exited with disciplined precision, yet the outcome remained painful. A quiet, insidious voice begins whispering internally. This isn't fair. I did everything correctly. The market should reward my efforts. But this sense of injustice represents the precise moment many traders derail their journey. Such thinking opens a treacherous psychological pathway. The instant you believe the market owes you something, your perception becomes distorted. You start forcing trades. You chase unsuitable setups. You attempt recovering losses that were never truly yours. You transition from responding strategically to demanding unreasonably. Here's the unvarnished truth. The market is indifferent. It guarantees nothing. No wins, no recoveries, not even a rational explanation. It remains oblivious to your plans. It knows nothing of your dedicated effort. The market doesn't care about your personal virtues or desperate circumstances. It's not a moral arbiter, a nurturing figure, or a divine entity. Instead, it's a raw reflection of collective human behavior, chaotic, unmanageable, and completely indifferent to your hopes. But this isn't a cause for despair. It's actually liberating. When you stop expecting the market to deliver something to you, you shed the toxic mindset of entitlement. Entitlement is the real barrier to growth. Many traders operate with invisible emotional contracts. They believe if they journal consistently, improvement must follow. If they adhere to a plan, rewards should automatically materialize. If they work hard enough, victory becomes their rightful reward. These are emotional fantasies, not market realities. The market doesn't recognize what you think you deserve. It simply reflects what actually exists. This explains why exceptional traders experience drawdowns, not because they're incompetent, but because randomness is inherent. Probability is messy and unpredictable in short-term scenarios. An edge is genuine, but it manifests over extended periods, not individual trades. Skilled traders understand this fundamental truth. They don't anticipate profits from every single play. They don't expect every price movement to validate their analysis. Instead, they enter trades prepared and exit without unnecessary emotional drama. When the market contradicts their expectations, they listen without taking it personally. The critical transformation is recognizing that trading isn't about being right. It's about consistent execution. It's about following a process over time without attaching expectations to any single trade's outcome. The moment you start expecting, you become emotionally attached. Attachment distorts your perception, leading to destructive behaviors, holding positions too long, averaging down inappropriately, overtrading, not because of market conditions, but because you wanted something the market never promised. This entitlement transforms trading from a strategic endeavor into pure gambling. Humility, however, transforms trading into an art of mastery. Humility acknowledges that doing everything correctly doesn't guarantee success. Failure doesn't reflect personal inadequacy. It reflects market complexity. The process belongs to you, but the outcome does not. The market owes you nothing. This perspective is where true trading freedom begins. By releasing your demands, you become an objective observer. You start recognizing patterns without emotional interference. You act without unnecessary drama. The trade no longer becomes a validation of your self-worth. Paradoxically, this detachment often improves performance. The less desperately you need to win, the more clearly and effectively you can trade. The market makes no promises. It extends an opportunity to the trader who seeks nothing, not validation, not vengeance, not absolute certainty. Instead, it offers a chance to engage skillfully. Tom Bass's wisdom echoes this philosophy. Winning or losing on any single trade matters less than adhering to one system. This approach represents trading without expectation, yet not without passion or commitment. The market operates on probability, not guarantees. Accepting this fundamental truth transforms everything. Emotions become softer, strategic edges sharpen. You cease battling market movements and begin harmonizing with them. When frustration rises and you feel entitled to a profitable day, pause. Reflect deeply. Who am I truly trading for? What unspoken demands am I placing on this transaction? What hidden outcomes am I secretly craving? Then release those attachments. Return to your breath. Return to process. Embrace the powerful truth. The market owes you nothing, and herein lies the game's profound beauty. Without expectations or assurances, something extraordinary emerges, a profound self-trust, a more authentic relationship with risk, a tranquil mind, and a refined trading approach. This is the moment you transition from waiting for external validation to embodying a trader's genuine essence. Intensity can be seductive, appearing powerful, impressive, momentarily effective. You might dive completely in, meticulously journaling trades, rising before dawn, consuming knowledge voraciously, analyzing every chart and candlestick pattern. You'll burn brilliantly, then inevitably burn out. Intensity is unsustainable. It thrives on adrenaline and fleeting motivation. True trading isn't a sprint, but a rhythmic, enduring practice. Successful traders aren't those who study most intensely for a month, but those who show up quietly, consistently, year after year. Not with dramatic gestures, but through small, repeatable, unglamorous habits. This is genuine mastery, not explosive but cumulative. Daily discipline, repeated rituals. This seemingly mundane brilliance becomes your competitive advantage. The market doesn't reward intensity, it rewards persistent, patient presence. You cannot force success through sheer willpower. You can't overcome randomness through sheer effort. Emotional regulation isn't something you can simply memorize or force. You build your edge by showing up consistently, regardless of the day's mood or your internal doubts. You still execute your plan, you log the trade, you review your journal, you take the walk, you follow the system, not because you feel motivated, but because this has become your core identity. This is true consistency. It transcends momentary energy. It's about who you are at your fundamental level. It's not about how intensely you work today, but what you're willing to repeat when no one is watching. Consistency goes beyond mere effort. It's about emotional regulation. It means staying centered when results might tempt you to lose control. It's about protecting your process even when immediate rewards aren't visible. This distinguishes amateurs from professionals. Amateurs trade in unpredictable bursts, driven by hope and crushed by outcomes, oscillating between extreme emotions. Professionals maintain a steady baseline, anchored by consistent rituals that remain unchanged, regardless of profit and loss statements. They don't require external motivation. They operate with an inherent rhythm. They don't chase wins. They trust their process. This rhythmic repetition transforms chaos into clarity. Examine any successful trader, not through their words, but through their daily actions. They journal meticulously. They reflect deeply. They review systematically. They follow strict checklists. They trade only under precise conditions. Their approach isn't dramatic or inspirational. It's pure discipline. This discipline gradually evolves into instinct. Each time you follow your system instead of your emotions, you build trust. Every trade executed based on your strategy rather than your mood reinforces your professional identity. Each instance of showing up when you least feel like it develops resilience. That's why consistency trumps intensity. Intensity is fleeting. Consistency grows exponentially. Intensity burns bright but briefly. Consistency is a steady, enduring flame. The market doesn't care about your hard work this week. It evaluates who you become over years. If you're chasing momentary momentum, trying to master everything quickly, or burning yourself out to prove your dedication, pause and ask, what can I consistently repeat? Not just during moments of inspiration, but especially during times of resistance. Your trading won't be forged during your best moments, but during your most disciplined ones. These are the days when motivation is absent, yet you show up. The days you honor your stop loss without hesitation. The days you resist overtrading even when you feel behind. The days you journal with brutal honesty instead of hiding from the truth. This is where genuine growth occurs, not through dramatic leaps, but through gradual layers, one consistent habit at a time. Avoid chasing intensity. Don't glorify the grind. Instead, build the machine. Program the process. Create a rhythm, then follow it. Not with perfection, but with persistence. The traders who endure aren't the loudest. They're the ones still present years later, quietly doing the work. Everyone else burned out, exhausted by the constant effort. In that silence, they discovered freedom, and within that freedom, they found mastery. Every trader encounters a moment, quiet, subtle, easily overlooked. It's not the anger after a losing streak, not the excitement of a profitable day, not even fear. It's fatigue, a soft, invisible weight pressing not on your shoulders, but on your spirit. You've been staring at charts for hours. You've executed too many trades. You've clicked not from clarity, but compulsion. You've remained not because you saw genuine opportunity, but because you couldn't walk away. This is the unspoken danger, not knowing when to stop. In trading, stopping feels like weakness, like surrender, like leaving money behind, like quitting, but it's not. Stopping is a sophisticated skill. Those who master it are the ones who survive. The market is open almost constantly. So is the temptation. Another candle, another opportunity, another potential setup always lurks around the corner, but your mind isn't always receptive. Your clarity isn't unlimited. Your trading edge can't be renewed in a single session. Performance inevitably drops, not because your strategy failed, but because you did. You're exhausted, emotional, overstimulated, no longer making decisions but reacting to shadows. Your ego resists stopping. It whispers, one more trade. Recover your losses. You can't end on a losing day. If you listen, you trade beyond your capabilities. You risk more than just money when trading. You risk your discipline, self-trust, and momentum. This is where the downward spiral begins. One bad trade quickly multiplies into two. A small loss creates a crack in your confidence. Gradually, you start overriding your own rules. You abandon the carefully crafted plan. You chase losses. You force trades. You hope for a miraculous recovery. All because you didn't listen to that quiet inner voice warning you it's time to stop. The true trading masters hear that voice. More crucially, they respect and honor it. They don't obsess over completing datasets or turning green. They aren't driven by the need to recover lost funds or redeem an entire trading session. Their sole focus is maintaining alignment with their strategy. When that alignment disappears, they walk away. But this isn't a retreat, it's a strategic reset. They understand that sometimes the most profitable action is closing the trading platform. Walking away protects your mental state. It preserves your emotional capital. It keeps the entire trading endeavor sustainable. In this challenging arena, longevity represents true leverage. Success isn't about being perfect, it's about remaining present with a clear mind and steady hand. Stopping becomes difficult precisely because it's not a technical choice. It's an emotional challenge. It demands you ask yourself, can I accept today exactly as it is? Can I release my attachment to the outcome? Can I respect the boundaries my own body is signaling? The masters can. They stop after 3 trades. They stop after 2 consecutive losses. They stop when their strategic edge dulls. They stop when market conditions shift. They stop when they themselves shift. They don't feel compelled to extract every possible profit from a chart. They know another opportunity will emerge, but they also know there won't be another version of themselves if they burn out today. When they step back, they don't spiral into self-criticism or sink into guilt. Instead, they reset, they rest, they breathe, because they fundamentally trust their process, not just during active trading, but during periods of intentional inaction. This represents the deeper wisdom. Discipline isn't just knowing what to do, it's knowing precisely when to stop doing it. It requires sufficient self-awareness to recognize your personal limits. They build enough self-trust to understand that pausing today isn't surrender, it's a strategic preservation of tomorrow's potential. Because trading isn't just about managing market transactions, it's about managing yourself. And if you fail to protect your mental landscape, you gradually erode your own edge, subtly, incrementally, until the entire endeavor feels oppressively heavy. Not because trading is inherently difficult, but because you refuse to allow yourself meaningful rest. Here's the rewritten text for the narrator. Create clear boundaries for yourself in trading. Set daily limits and establish recovery rituals when you reach time thresholds. Learn to recognize your personal warning signs, when concentration starts to slip, when emotions begin to surge, when frustration replaces your natural flow. When these signals appear, pay attention, respect them. Stop not because you failed, but because you're winning by choosing personal sustainability over constant stimulation. Trading transcends mere strategy. It's about rhythm, and rhythm demands pauses. Just like the most beautiful music contains moments of silence, your trading approach needs intentional breaks. Stop with grace and purpose, understanding that your next successful trade requires the best version of yourself, not the most exhausted, depleted version. You've absorbed countless strategies, studied systems, copied indicators, followed courses, and mimicked entry techniques. Yet something feels fundamentally wrong. The setups work for others. The rules seem logical on paper. But for you, they feel alien, forced, and restrictive, like wearing an ill-fitting costume. This isn't failure. This is misalignment. The fundamental truth is that you cannot trade by imitating someone else's approach and expect to discover your authentic trading self. The world's most successful traders don't just follow strategies. They follow something more profound, themselves. Their systems are organic extensions of their core identity, their natural pace, risk tolerance, emotional landscape, and worldview. They don't fight against their inherent nature. They integrate with it, and you must do the same. Trading isn't just technical, it's intensely personal. You're not a computer or an algorithm. You're a complex human with a unique nervous system, ingrained patterns, emotional wounds, and intuitive instincts. Until your strategy harmonizes with your psychological makeup, you'll experience constant internal friction. Perhaps you're attempting scalping when you're actually a deep, methodical thinker who processes slowly and analyzes comprehensively. Such an approach will inevitably exhaust you. Maybe you're trying swing trading despite being naturally impatient and anxiety-prone, craving rapid feedback. This method will feel suffocating. You might be forcing high-frequency trades because someone claimed more activity equals better performance, but you genuinely thrive on fewer, more intentional decisions. This doesn't make you lazy, it makes you selectively focused. Whatever misalignment exists, it matters profoundly. The market isn't just testing your technical strategy, it's challenging your ability to remain authentically yourself under mounting pressure. Wizards understand that borrowing someone else's trading approach is futile. They don't seek universal solutions but personalized strategies. Their research goes beyond market charts. They deeply analyze themselves. They ask penetrating questions about their inner landscape. How do they handle uncertainty? What tempo suits their temperament? Gradual progression or rapid action? Under pressure, do they freeze or react impulsively? Do they require strict frameworks or prefer spontaneity? Are they solo performers or do they thrive with external accountability? These introspective inquiries aren't about self-judgment, but self-understanding. They craft trading systems that harmonize with their inherent nature. By aligning their approach with their personality, they eliminate internal resistance. Their rules match their natural rhythm, time frames complement their attention span, and trading profiles provide emotional comfort. This alignment transforms trading from a forced performance to an authentic expression. Traders stop chasing external excitement and start following their internal guidance. They trade not for adrenaline, but for genuine resonance. In this congruence, they discover profound peace, no longer mimicking others, but embodying their unique trading identity. This journey demands radical honesty. Traders must relinquish the seductive fantasy that the next strategy, mentor, or technique will miraculously resolve everything. True transformation comes from acknowledging, I've been playing someone else's game, and now I choose mine. This doesn't mean isolation, but integrity. Borrowing structures and ideas is acceptable, but the critical question remains, does this truly fit me? Traders who impose foreign approaches might experience temporary success, but inevitable burnout awaits. Those who design from their core win sustainably. Perfection isn't the goal. Matching external metrics is irrelevant. The only requirement is honest self-awareness. When trading style synchronizes with one's nervous system, intuition, and life force, everything becomes effortless. Self-trust deepens, hesitation diminishes, recovery accelerates, and personal growth becomes organic. As you forge your own path, each step feels increasingly familiar, like coming home. Initially, everyone craves rapid success, the breakthrough, consistency, freedom, and those magical numbers signaling arrival. The world amplifies this desire, promising quick solutions, 6-month profitability plans, transforming modest investments into massive returns, and mastering strategies supposedly used by financial legends. So you push harder, you study intensely, trade more aggressively, take bigger risks. Momentarily, progress tastes sweet, but inevitably, you stall, you hit walls. You tumble backward, confidence evaporates, results fluctuate wildly, and doubt creeps back in. Why? Because you've been sprinting in a marathon, a crucial detail rarely mentioned. Seasoned traders understand something profound. They don't play for weeks or months, but years. They don't chase fleeting victories. Instead, they accumulate small, consistent gains. They comprehend that genuine growth is compound, not just financially, but psychologically. Every mistake analyzed, every journal entry written, every rule followed when deviation seemed easier. These constitute real growth. Invisible, slow, unglamorous, yet authentic. Mastery isn't crafted quickly. It's forged through cycles of drawdowns, stagnation, emotional exhaustion, and rediscovery. Those who endure these seasons don't merely become better traders. They evolve into wiser individuals. The market tests more than strategies. It examines patience, resilience, your capacity to remain centered when everything seems dysfunctional and no one observes. In such moments, you face critical choices. Will you surrender, pivot again, retreat to comfort, or will you zoom out, remembering this is a long-term journey? You're pursuing something deeper than profit. You're seeking presence, pursuing mastery. Trading transcends mere skill. It's a lifestyle, a reflective surface, a perpetual training ground where your primary opponent is yourself. This dojo never closes. There's no final graduation, only continuous refinement. Monthly, you discover new chart insights. Annually, you uncover deeper personal revelations. Eventually, you reach a transformative realization. Losses no longer trigger panic. Instant wins lose their allure. You're no longer trading to manufacture emotion. You're simply present, engaged, evolving. You trade to maintain alignment. Your growth wasn't loud or flashy, but patient and deliberate, and that patience was the essential core of your journey. Wizards inherently understand this profound truth. They don't measure their progress in days or weeks, but in decades. They've witnessed countless market cycles, bull markets, bear markets, sideways markets, absurd and illogical markets. Yet they remain, not because they're the most intelligent, but because they're the most consistent, the most disciplined, the most quietly obsessed with the process itself. These traders don't chase fleeting legacy or momentary recognition. Instead, they meticulously build something enduring, one trade at a time, one journal entry at a time, one mindful breath at a time. There's no urgency in their approach because they deeply comprehend that true greatness requires time, and time ultimately rewards those who respect its rhythms. If you find yourself feeling impatient, believing others are progressing faster, questioning whether your efforts are worthwhile, take a moment to pause and zoom out. Ask yourself critical questions. Am I growing emotionally? Am I expanding intellectually? Am I evolving behaviorally? Am I learning something meaningful each month? Am I persisting even when I feel left behind? Because simply remaining in the game is the fundamental objective. You don't need to triumph every single day. You just need to endure. Let others exhaust themselves chasing viral moments and instant gratification. You're constructing something timeless and substantial. While others showcase their wins, you're quietly accumulating wisdom. As others frantically jump between systems, you're methodically refining your edge in silent, solitary contemplation, sustained by unwavering faith. One day, years from now, you'll realize the market didn't just make you financially successful, it made you whole. Every loss, every struggle, every seemingly slow day wasn't an obstacle, but an integral part of your transformative path. So embrace the long game, not because it's comfortable, but because it's authentic. Because it's the only game truly worth playing. In this extended journey, you'll ultimately discover what you've been seeking all along, yourself. You've arrived at a pivotal moment, whether it's the conclusion of a path or the beginning of a deeper understanding. What started as a quest for market strategies has revealed something more profound, a mirror reflecting your true potential. This was never solely about defeating the market. It was about becoming someone the market cannot destabilize. And that, in its essence, is true alchemy, not the mythical transformation of lead into gold, but the genuine metamorphosis of reactivity into discipline, of ego into humility, of hope into patience, of pain into wisdom. This is the genuine alchemy of the market wizard, not a magician, not a genius, just a human being who chose to meet themselves every single day in the quiet crucible of the screen. While others chase profits, the wizard chased presence. While others sought predictions, the wizard practiced awareness. While others swung wildly between hope and fear, the wizard stood still, watching, breathing, learning. Because the wizard understands the market is not chaos, it's a teacher. Every drawdown, a question. Every setup, a lesson. Every losing streak, a mirror. Every win, a test. Not of your skill, but of your identity. Who do you become when it works? Who do you become when it doesn't? Can you hold your rules when the storm rises? Can you walk away when your ego wants to fight? Can you sit with silence until clarity returns? That's the work, not in finding the perfect system, but in refining the self who uses it. Because the true edge is you, not the you who started, but the one who was forged through every broken rule, every late night chart review, every moment you thought of quitting but didn't. You stayed, you learned, you were patient, and in that staying, something shifted. The market no longer owned your emotions. You began to breathe between the candles. You began to see not just price action, but your own patterns, your own shadows, your own growth. And slowly you stopped needing to win because you realized the win was becoming this version of you. The disciplined one, the centered one, the one who respects the process more than the outcome. That's a wizard, and that's the game. Not getting rich quick, not beating others, but mastering the only thing you can ever truly control, yourself. So now as this journey closes, you have a choice. You can walk away inspired and do nothing, or you can walk forward transformed and do the work. Pick one law, live it, then another, then another. Stack them slowly, steadily, quietly, until they are not rules you follow, but truths you embody. And one day, without noise, without fanfare, you'll realize you don't just understand the market, you understand yourself inside the market. And that is power, that is freedom, that is alchemy. So here's the final truth. The market was never your enemy. It was your mirror, and you were the magic all along. If this series spoke to something in you, not just the trader, but the human behind the screen, then don't let it end here. This isn't just a video. It's a mirror, a guide, a moment of clarity in the noise. So take what resonated, write it down, breathe it in, live it out. Which law will you carry into your next trade? Which one changed the way you see yourself? Because this isn't just about charts. It's about choosing who you become. Trade by trade, breath by breath. Stay present, stay disciplined, and trade with intention. Don't forget to like, subscribe, and tell us in the comments how you're learning to care for yourself. Your words might inspire others.